I'm joined right now by JP Hanson, Managing Director of Houlihan Lokey. Thank you so much for being here today. JP, tell us about Houlihan Lokey.
So Houlihan Lokey is an investment bank. It has been in existence for over 40 years. The firm specializes on advisory services, ranging from valuation of corporate entities to traditional M&A advisory, board advisory, corporate finance with respect to capital raising for private placement of debt and equity securities, as well as restructuring and recapitalization services.
As a global corporation, tell us what you're seeing in the energy sector with these falling prices, the oil prices.
So the key driver for the decline in commodity prices has been an imbalance of supply and demand. Supply has been growing globally, spurred in part by the shale technologies that have been developing throughout the United States and increased oil and gas production within the United States. Demand has fallen, unfortunately, as a result of stagnation, economic stagnation in Europe and in China, as well as some lessening of demand from the manufacturing sector.
Now, this wasn't a surprise to you that this was going to be happening, but was it a surprise that it happened so quickly and so suddenly, and the drop as much as it was?
Yeah, there was an expectation that over time there would be a cap, so to speak, on the price of oil as a result of this increase in supply. Historically, demand had been growing, particularly within Asia and China and Japan specifically, as those economies had seen robust year-over-year growth. As growth in China has declined a little bit, it's not negative growth, but it's certainly come up short of what were forecasts. And the European economy has stagnated. The demand no longer was growing sufficient to keep up with the growth in supply. You also had Libya, which had been, as a result of their civil unrest, Libya had been offline as an oil and gas producer. As it started producing again, ranging from 650 to 800,000 barrels a day, which is a significant amount, that supply coming back online once again created this supply glut globally, as oil is a global commodity.
So when do you see this stabilizing?
That's a difficult question. The reality is that companies had drilling commitments that even in the midst of the falling prices in the fourth quarter and what has been, call it low prices throughout the first quarter, companies had drilling commitments. And if they break those commitments, then they have financial ramifications. Additionally, they have hedges in place. Those hedges typically will run through the first at least 6, most likely 9 months of 2015. Those hedges are significant, if not majority hedges for companies' production. And those hedges are tied not only to price, they're also tied to production. So if companies don't increase production year over year, those will have negative financial ramifications as well. So given the negative financial ramifications from drilling commitments and negative financial ramifications for breaking hedges, we will actually see production increase, notwithstanding the existing supply glut. We will see production increase for the first half of 2015. That will further pressure prices, make them more volatile and make them more volatile to the downside. In the back half of 2015, we should start seeing, hopefully, supply at least stabilizing. That's indicated by the drilling rigs that are not getting deployed, because that doesn't reflect immediate decline in production. That's future decline in production. So we should hopefully see some stabilization in the back half of 2015. And then supply should start peeling off in 2016 and beyond.
Okay, so until we have the stabilization, what's the challenge in advising firms? What do you do there?
Well, a lot of what companies are trying to do right now is just extend the runway from a liquidity standpoint. hopefully surviving until commodity prices rebound. Now, companies do have a number of levers that they can pull. The most immediate lever is looking at reducing their costs. They are speaking with all of their service providers to reduce costs in this environment. There also are typically assets that potentially could be sold within companies, whether they are producing assets or maybe they're just non-core for the long-term viability of the business.
So these smaller companies who may not be able to survive this, who are struggling the most, do you see mergers?
Mergers of corporate entities in the oil and gas space are few and far between. They do happen. Typically, it's led by financial sponsors who are trying to combine portfolio companies to create some synergies. Since it's a commodities business, economies of scale really do matter, and combining entities is a way to rationalize costs. But for the most part, they're not businesses that necessarily need to remain as businesses. The underlying assets can be sold, and so you'll see mergers and acquisition activity around the assets themselves, not necessarily the corporate entity, because the corporate entity is actually a detraction from value of the underlying assets.
JP, you've given us tremendous insight. Thank you so much.
No problem. Thank you.
Have a great day.
You too.